Hello, welcome to another episode of the Capital Employed podcast. For this episode, we had the pleasure of being joined by the guys behind the excellent Partnership Investing newsletter. For now, they have chosen to remain anonymous, which is fair enough, so this is why I don't say their names. It's not because I'm rude. In this episode, they talk us through the characteristics they seek in a business, how they find these companies, and they then provide their thesis for investing in two small caps they think have lots of growth potential. I really enjoyed listening to them, and I think you will too. Now, we have some news. To supplement this podcast, we have recently launched the Capital Employed letter. We will be doing 2 write-ups per month about stocks that have piqued our interest. These will mostly be stocks with smaller market caps from around the world. So if that sounds like your cup of tea, visit capitalemployed.substack.com and add your email to the list. That's capitalemployed.substack.com. Okay, let's jump into this week's episode. Please enjoy my conversation with the masterminds behind the Partnership Investing newsletter. Hi guys, thanks for coming on to the podcast.
Thank you for having us, Jon.
Can you provide some information to your backgrounds? How did you get involved in investing?
Me, I'm a college student in the Netherlands, currently studying law, so that's that's quite far from the investing topic. But in the first year at university, I quickly found a passion for investing, as I had some extra money laying around, and I tried to find a way to let it grow without being blatantly speculating, I guess. Since then, I really have loved the process of learning about businesses and analyzing them and actually putting my money to work in them and to become a better investor. Fortunately, I was exposed very early on to great investors, which kind of stirred me onto the right path. You can think about Warren Buffett, Terry Smith, Joe Greenblatt, etc. I avoided some pitfalls early on, but still had some learnings along that journey.
First got into investing in high school. I read several books about investing, and I really became hooked about investing when I read about Warren Buffett. My interest in investing encouraged me to study finance and join an investment club. And that's also how we know each other.
Yeah, we met at a student investment club here at the local university.
And why did you start the Partnership Investing newsletter?
Yeah, we've been in contact about investing for quite some time now. We came up with investment ideas, we discussed them, and basically our dream is to start a fund. And this is a way to start one. We pitch stocks to our readers to eventually build a portfolio of 15 to 25 positions. And along the way, we will update our readers about the developments of portfolio companies. We try to post a new article monthly, and since we aim for performance, we will not always pitch a new stock per month. But we also post articles regarding investment-related subjects to educate us and our readers. So actually we try to add value in 2 ways, pitching high potential stocks and education. It's also a great way to journal and keep ourselves honest about past decisions.
I've been a subscriber for a while now. I really enjoy it. I think it's a fantastic newsletter, really well written as well. I like the way you lay out the thesis for the different companies that you write about. But what type of businesses do you like to invest in? Are there any characteristics or business models you're looking for?
Not any specific ones, but I think first and foremost, we're really trying to find businesses that not only do we find interesting, but we really feel excited about over the next 5 to 10 years. We might feel very passionate about the service or products, the technology, and that's really what interests us in spending that much time researching. We might as well enjoy it. So that's really how we look at it from a first principle standpoint. And then when we actually look at a business, it's really important to us to be curious and interested and to really think about the business as the CEO would, to really think about the company from within, its relationship with customers, suppliers, its place within the industry, how it's perceived, dynamics in the industry. Those are really the things that we are focused on to find out what everyone in the ecosystem values most. We ask ourselves qualitative questions like what does this business even exist? What should it grow profitably in the next few years? Does the business actually get better as it grows, for example? And from a investment universe standpoint, we look globally for the best businesses we can find, mostly focus on the small cap space simply because there are more room to grow there. And we really try to build a portfolio of 15 to 25 stocks of the best investment opportunities we can find globally to compound our capital and to hopefully also teach some things to our readers. We don't rule out any unprofitable companies, but we do really focus on a positive unit economics that the company needs to scale very well. So that's in a nutshell how we look at analyzing businesses and investing in them.
Yeah, I've noticed you have companies from all around the world. There's a write-up about a UK company, Australian, Swedish, American. Where are you finding your best ideas at the moment? What sort of country or region?
The markets we are most excited about right now might be the UK, Sweden, Western Europe in general, because there's a valuation gap there and there are some quality companies. So from geographical standpoint, that's what I would say about it.
We're generating ideas in multiple ways, actually. We do screens with particular metrics we like, mostly about capital allocation, such as return on invested capital and return on capital employed. We find the most interesting companies with stable and increasing return on invested capital. And for most, preferably the companies with the highest return on invested capitals within their industries. An increasing return on invested capital could also imply that the moats are widening. Yeah, and furthermore, we are also coming up with ideas via Twitter. We're talking to other investors. And another idea generation method is via supply chain analysis. In such an analysis, you analyze the supply chain of an industry to find out where the opportunities in a supply chain are. We have not done this yet, but we will spend some more time on this method in the coming time. It is also a good way to learn for us about an industry.
You know, I've noticed most of the business models behind the companies you like, they seem to be subscription type of businesses.
It's easier to predict them, and the unit economics are quite a bit clearer about them. So that's very important as well.
If we can delve into your portfolio, can you talk about two stocks that you're very bullish on for the long term? What was your thesis for investing?
The one I'll talk about today is a UK company. It's Naked Wines. In my opinion, it's one of the most interesting business model I've come across in the last 2 years, let's say. So Naked Wines, what they actually do, they sell wine direct to consumer online. So it is a subscription business, like you mentioned. Their subscribers are called angels, and the funds that those angels pay in subscriptions is used to fund the production of the wine, and then the wine is made by independent winemakers that work with Naked Wines, and Naked Wines effectively finances the production process, and sells the wine on their platform. Winemakers with this structure can focus their attention on making the best wine they can without focusing on sales and marketing, which is a hassle for them, really. If you just look at the $25 bottle of wine, for example, it only has about $8 or $10 of wine in it. The rest is just margin for the distributor, for the retailer, and some sales and marketing costs that are mixed up in there. So Naked Wines really bridges that gap between the actual value you get and what you're paying for. And that's the value proposition to the customer. And we feel the value proposition for the customer is even stronger in the US, which is a much larger market. If you look at how the US wine industry is set up, wine makers have to sell through distributors. They basically have to. So Naked Wines cuts off that middleman, and the winemaker is better off for it, as is the customer. In our opinion, Naked Wines gets better as it grows because it benefits from some network effects. You can see how more winemakers join the platform, the more variety of wine there is for consumers to buy, which makes it obviously more interesting. And the more consumers join the platform, then Naked Wines has more funds to make more wine, and more winemakers might actually be incentivized to join the platform. There's also some skill advantages at work there, especially in the fulfillment network and the cost of making wines. The unit economics get better with the scale, which they also can share with the consumers or the winemakers. The total industry in the US is $5 billion. Naked Wines has the largest market share in terms of volume, but not in dollar terms. So there's a lot of room to grow there, and it really is a testament of Naked Wines' skill. We basically think Naked Wines at a current valuation could compound its value at about 15% a year or so in the next 5 years. So it really is to us a great opportunity to compound your capital for the next few years in a high quality stock.
Thanks for that assessment of it. It's a company that I hold myself, and I'm very bullish on it too. So it's great to hear your thoughts on it. How about your second company that you're bullish on?
Yes, yeah. I wanted to talk about Intellicheck. Intellicheck is a stock we pitched a couple of months ago. It's a US-based company and it's specialized in identification verification. It's a small cap as well, and it has around market cap of around $170 million and is listed at the Nasdaq. Yeah, identity theft is a common problem in US. The identities of more than 14 million US citizens were stolen already. One is able to buy identity data on the dark web rather cheaply. For instance, social security numbers can be bought for $1 and a driver's license for $20. Yeah, Intellicheck has the possibility to check these identifications with near certainty. The US identifications have barcodes that can be scanned to prove the validity of the document. There is an encrypted code behind every barcode, and Intellicheck has the code behind the encrypted code due to its relationship with the AMVA. And the AMVA is the American Association of Motor Vehicle Administrators. Intellicheck is the only one with this relationship. And although Intellicheck offers their service relatively cheaply, the relationship with the AMVA ensures that Intellicheck has gross profits of around 85%. Where Intellicheck has the encrypted code behind the barcode on the identifications, competitors use artificial intelligence to reverse engineer identifications and the encrypted code. Reverse engineering the code costs time and money. So yeah, this is for us it's a competitive advantage. Intellicheck used the technique for identification verification at governmental bodies. However, since the start of its CEO, Brian Lewis, in 2018, they are targeting financial institutions instead. In 2020, retailers lost around $100 billion at transactions where credit cards were not present. In these transactions, an identity thief could use the fake ID and the last digits of a credit card to pay. The cost for retailers and banks range from $2,000 to $3,500. And Intellicheck can scan identifications with an efficiency rate of over 99%. So one can imagine the cost savings retailers and banks can achieve with the service of Intellicheck. Also, research shows that the identification verification market generates a revenue of between $7 and $8 billion in 2020, and this will expand to around $16 billion in 2025. One can imagine the upside potential of Intellicheck. Intellicheck is now acquired 4 of the top 10 US banks as customers in the last couple of years. But only 15% of these banks' customers use Intellicheck services. We think that due to the advantages of Intellicheck services and its easy integration, a rapid growth of this implementation rate, and thereby its sales is expected. The market cap of Intellicheck is still small in comparison to their total addressable market. There are competitors and some other risks. However, due to the combination of the market potential and the superior service they deliver, we think that the risk reward is very valuable.
Where's the kind of the moat with this business? Would it be kind of once they're ingrained, there's sort of a switching cost element to it?
Their efficiency rate is the highest in the industry, and they have cost advantages because of the relationship with the AMVA. And so, because of the sole relationship with the AMVA, they're the only ones who can, with near 100% predictability, can verify identifications.
Yeah, it's a really interesting company. I think I might have to add this one to my watch list. Okay, guys, thanks for sharing those two companies. We're coming to the end of the podcast now, so where can listeners go to find out more information about you and your investment letter as well?
Yeah, so people can find us and read our posts and subscribe even if they find it interesting at partnershipinvesting.substack.com. So partnershipinvesting.substack.com. And people can also find us on Twitter at partnershipinv. So partnershipinv. People can just shoot us a DM if they have any questions. And we hope people will enjoy our future posts.
I think they will. I think it's your writing's really good. Some really good companies you're spotting. Hopefully we can get you onto the podcast again, maybe a bit later with some new ideas. That's great. Yeah, thanks so much for coming on to the podcast.
Yeah, thank you.
Thank you for having us, John.